TGIF Warriors. That's right, Alexander. Thank God I found F.A.C.E. How are you, buddy? Glad you found us. How's Sinatra? I'm in my lofty perch, Bran. Yeah. I laugh. George, how are you? KMan.
Hi, Dale.
So a little bit of weakness in US dollar yen.
Yeah, there's a bit going on for expiries around 150, and that's probably attracting it for another 2 hours or so, unless the PCE data send it one way or the other. But yeah, it could be just a magnet, and we'll see in 2 hours' time after expiries.
Okay, so basically options.
Yeah,
probably a lot of 150 strikes. Is that the biggest open interest one?
Exactly. It's about 5 billion or so worth of them expiring here.
Yeah, so ideally both the puts and calls, they pin it. They pin it here.
Most are calls, so that's probably why we're hanging around here. They're probably managing it, so we'll see in a couple of hours' time where we are at expiry, and then take a side. Yeah, that's about it. Really, there's not a lot to say about this.
All right. Some follow through to the downside in the euro.
Yeah, it's
didn't have a good week. I mean, if it's Friday, right? So
yeah,
I don't know if you do, KMan, but everyone should look at weeklies, right?
Yeah, it
you
does.
Look at them,
and I think there's a lot to do with yesterday as well. I think Lagarde confirmed a hold, and they're taking growth weakness into account. We had a bit of advanced CPI out of one of the states in Germany, which is coming off as well. I think there's a bit of logic in the euro being a bit the weaker brother among other currencies.
Okay. All right. And cable has even been weaker, except for the last few days, but that I mean, that's not a great weekly close, is it?
No, it's not a great weekly close, but it's been, well, we could argue an uninteresting event, the combination ECB and US GDP, but it is interesting that cable is still higher than where we went into the US GDP numbers and labor data than especially the continuing claims for the time being. But again, we will see where we close the week. If we start to close below 121, I'd say it's tonight. I'd say it's weak again. Yeah.
Hey guys, I've used it for a long time, but I've really noticed like the 9-day or 9-week or 9-hour is a pretty nice moving average. I've seen a lot of rejections, and look at this, how it followed this path. Anyway, just notice that after using it for about, I don't know, 100 years, it's pretty good. Brand uses the 8. Okay. Commodity currencies kind of fighting the European trends.
Yeah.
That's a better looking week. I mean, but compared to weekly close, you have an up close.
Yeah. That's
compared to the other stuff.
That is something that's going to be a very interesting watch next week, I reckon, because if start of next week we still hold those lows, it may mean something.
Yeah, start to close over 64. That there could be a pretty good pop here.
Yeah.
Canada.
And both of them, the Aussie and the Kiwi have been doing quite a bit better on the crosser side of things as well, and that is something I took away as well from the what happened this week. They've been very weak on the cross side, both of them, until yesterday, the day before yesterday, and then all of a sudden they're starting to return the thing. Yeah.
Well, there is, if you talk interest rate differentials, I mean, China's going in the opposite way we are.
Hmm.
So, that could be part of why, maybe China rebounds. This was a pretty good down day in the 10-year. They're up a couple bips today, but here's the weekly. It is a reversal week. And yesterday down about 11 bips. So,
Mm.
we'll see. Are we going to charge up here one more time
Yeah.
with the dollar, or are we going to continue to correct?
I mean, for as long as we're holding those prior lows, there's not much happening. I know we are turning around those break levels, and
Yeah,
you can draw a few lines there as well on support. But as long as we are holding those prior lows, I still think it's like just a bit of a wishy-washy going on right now. But it is a fact that on the back of that big GDP print that we
yeah.
had yesterday, the market must have been quite well positioned, or positioned in that way, ready to take it higher, and then people are forced to get out of
It
the
was
position
up
a little
here.
bit. And that's the same that happened with the dollar, actually.
Yeah, yeah, and the dollar's getting more of it back than yields are. And you look at even the long end, that's a 4-hour, but you have a reversal week. And I'm not saying it's going to happen today, but if we take out last week's highs of 8637, which is, pretty good update today, you'd have a key reversal over this high. So today's an important day to see if it can make any headway. Any news that could do it today?
No, but we are trading value data end of month, and I think you have to look at what happens at the London 4 p.m. fixing today. So in about 3 hours from now, what
Yeah.
happens afterwards will be perhaps more telling than what happens before.
Okay.
Because there's
And
always a
and
bit to
just
do.
and
It's
good
called
morning.
lower.
Good morning, guys. And
Hey.
KMan, just to confirm,
Yeah.
there we are expected dollar strength because of corporate demand, right?
A little bit, yeah. But I just want to remind people that it did not really work last month. But yeah, all the prior months were pretty visible, and the fact that dollar is a little better bit since you guys walked in could hint that there is a bit to do. But it's always conditional.
Yeah, and I guess some of the reason why we get this corporate demand, at the end of the month here is because we've seen, we see some repatriation overall, and I think that has to do with a lot of the current environment we're in. But anyway, it's a great point that you bring up, and thanks for bringing it up for us.
Yeah,
So
no problem.
keep an eye on this. Is a 3 drive. You need a negative close. This is a daily.
No, don't talk shit about my dollar Canadian. Please stop, Dale.
All right. Well, it's
Please.
a 3 drive.
No, go to the
But,
weekly chart and tell
All
me
right,
otherwise.
but anyway, Blake, I've done 3 drives, and you see this line here.
Yes,
What
yes, I
happens
see
a
it.
lot?
Yes.
Throwovers, where
Yeah.
it just breaks through this uptrend line and gets straight lines.
Yeah,
it's
actually,
like either or.
It's great. One of our traders, Dimitri, he does really well with the trader funding program. He's in our chat room and stuff, and he mentioned the 3 drive, exactly what you're pointing out. He's like, maybe that's stalling us, and I'm like, no. But it is. I mean, you can't ignore it. It is.
Yeah.
And Dale and his 3 drives. Damn
Well,
it.
I'm glad. Well, look, people use it. He brought it up.
Absolutely.
I'm glad people are learning it. It's just one tool, but it's a good one. It's a good tool. So it's the only one I know. It better be. I'm
Come on now.
pony. I'm a one-trick pony. So
hey,
I don't see any 3 drives. What should I do now?
There's a couple things that are developing, and I thought it was kind of important, is especially you know, KMan, as you're talking about the yen and the big, you know, expirations around this 150 level, and you know, we're trading just sub 150, but I mean, we're basically here. It's like being at a, you know, at a big moving average. It's like we're on it, you know, above or below, we're pretty much on it. But speaking of which, the Nikkei is on its 200-day. It's on the 200-day moving average and right at the breakout point, this 31,000 level.
I saw that yesterday. I go, wow, you know, and that was the star of the show, right?
Yeah, I mean, that's been kind of this. That's where people have been hiding out, you know, in Japan. Kind of wish I was hiding out in Japan, to be honest. But yeah, I mean, it's right there. You're on a weekly chart, but if you go to the daily chart, it's right on the 200-day. Yeah, it's interesting, and right at around this breakout point, you can see it right there.
Yeah.
So very big inflection point. And one of the other things that stood out to me, Dale, is if you pull up the Dow, we're at new trend lows and we're below the 38% retracement now. So this is it's kind of a big deal. What's that?
Yeah, grab them.
Oh, here I'll grab it here.
A picture speaks 1,000 words.
Yeah, here, just whoops, that's not what I wanted to do. So hold on, I clicked the wrong button here. There we go. Let me get over here. So yeah, here's the Nikkei, you know, right on that 200-day moving average, as you were just showing. But if you look at the Dow is at new trend lows. You see, this is the 38% retracement. We came out of a wedge, you know, weeks ago, but we're hitting new trend lows, and I find that pretty interesting that we're seeing some of the, you know, the Dow, the big caps kind of driving us lower. But it's also interesting that we, you know, you take a look back at like this week's earnings, and like we had Amazon, what a big beat. I mean, that was huge. Matter of fact, it was a ginormous beat.
And Microsoft, but Microsoft gave it back in 2 days and then some.
Well,
Microsoft was up 14.
That's the thing.
Good earnings.
That's the thing that we talked a lot about yesterday, is you got to watch the price action. When you get gap and craps, that means, you know, you gap up and then you just give it all back. That's very, very bearish price action of the market.
People who buy headlines today sell newspapers tomorrow.
There you go. You know, I think,
and there are people that bought the good earnings story in Microsoft and bought that earnings.
Of course,
the gap.
Of course. You know, and I mean, you look at Amazon's numbers, and you know, Amazon was breaking down yesterday towards the 200 DMA, and here we are pre-market trading much higher. I would not be surprised if we give back these gains, and they were blowout earnings. The thing is you're seeing a lot of these tech companies do well, but that's not
carrying the day for the market.
It isn't, and that's the scary thing. And you know, a lot of the you know, commentary that's coming out of these companies that suggests that, you know, you could see why the market's trading heavy, and that's the
and Google's gap lower. Google got killed. Show Google from their earnings. So there's the other side of the story. If you don't deliver, you get killed.
Yeah.
Okay.
Yeah. So anyway,
so if you deliver, you get smoked, and if you don't deliver, you get killed.
Yeah, there you go. Yeah, exactly. That's pretty much it.
You know what, guys? Before you get to you know what's going on, and you guys could say I'm an alarmist, but what's happening in the Middle East is bigger than what the Fed's going to do, and any economic release and month-end flows. And you could tell it's expanding because you know, we're retaliating against some of Iran's proxies that are hitting our bases inside Syria and Iraq. You know,
but let me ask you this, Dale. I mean, I hear what you're saying, and I tend to believe you. I mean, I tend to believe that theory, but the market's really not showing it's carrying a whole lot yet. I mean, right?
Yeah, comes in waves.
I mean,
it'll come in waves. If it has to react more, it'll come in waves. Because if you look at the FX market, I mean, no one in the FX market is really going all ballistic about it right now. That's what I call the collective Alzheimer. You know, something happens, you react, and then the market forgets about it. And that's extremely
I like
visible
that
right now.
collective Alzheimer's. That's good.
I always thought it was ADHD, but I
I
think
know
I
I
think it is
contribute.
Alzheimer's.
I contribute to that collective. I call it old timers disease instead of Alzheimer's.
I think you have a little bit of ADHD Alzheimer's.
And we are going to close under 4,200. To me, that's a big deal.
Yeah,
And
a very, very big
we're
deal.
down 10%. I mean, there are some bad technical things going on in the S&Ps.
Yeah, the bounces have been really shallow in equities. I mean, we can't even get a lift. And you think about, again, I'll just go to earnings really quick, and you think about all the big companies, tech companies that beat Intel's, good numbers. There a lot of these cost cutting that these tech companies are doing. It's feeding through the market. But look at the broad markets. Do they care? No. And that's
not the Russell doesn't care about anything.
Well, yeah, just all the way around. And yeah, it's scary moves, Dale. I mean,
it'd be hard to launch shorts here, but it sure isn't anything I'd buy.
Yeah.
There's divergence, nice divergence you're showing there, but it's an ugly looking
thing. But we're also we're threatening some big moves lower. All right, hey, let's go back to currencies really quick. And KMan, why is the euro trading so damn heavy today? I mean, this thing, speaking of like a market that can't get out of its own way,
because I'm short.
Is just, it looks demolished.
It's just because I'm short. Look for no other reason.
It's queuing off a KMan shorts. It's heavy.
No, but it's what I've been saying. I mean, sooner or later Lagarde will turn, and I think yesterday she was trying for an hour not to turn, but then she goes in. We could have actually listened to her press conference for 3.5 minutes and then hook off, because she said everything there. She was acknowledging that the fight, and that's some line that she has to say, acknowledging that the fight against inflation is not done. But then they were also acknowledging that growth is going to slow down and they're data dependent and we're on hold, she said. But I mean, I've said it on the flow show this morning as well. I'm going to stick my neck out and say that the ECB is done. And if you look at the divergence between, just take those two, US growth and European growth, you had one turning at 4.9% in Q3, and the other one is going to have trouble to print 0.5% or 1%.
Yeah.
I think there's some logic that the euro is heavy versus not only the dollar but other stuff as well.
That makes a lot of sense. Growth differentials, because I mean that's what the market will be looking at moving forward, because that's going to help drive interest rate expectations. This is where you start going, okay, the ECB will be the first to cut rates, and or of the some of the G7 central banks or whatever. But you look around and you're like, well, this could very easily put the euro, and you think about like a longer term flag pattern. I mean, if this is a flag pattern, oops, let me grab the flag stick. That takes us well below parity. I mean, and a lot of people really were thinking we were going to 125 just 3 months ago, right? So
can you put that line in the red line instead of further in time? Can you put it just for today? I'd be a very happy man.
Just for today. Could you imagine? I have a feeling you and your wife would be traveling to Japan by the end of the year to go back and visit. All right. Well, sterling also trading pretty heavy. You can see I think it's more of a bearish wedge, but it's trading, it can't get out of its own way either. Yeah, we're getting a little bit of a lift right now. I mean, here, just as we're going into Friday, but overall, I mean, it's trading pretty heavy. You got, Dale, we talked a little bit about this, the Aussies just kind of hovering around this level, struggling at the 618 retracement. By the way, it's hitting up there today, just from in a range, but Dr. Copper is holding up pretty well despite all this, right? So what are you making about the doctor at this point?
That could be China too. You know, we're talking about they're on an exact opposite monetary course than we are. Their easing was record amounts. Maybe it's going to take hold.
They have taken the spaghetti up against the wall approach versus the
Yeah.
bazooka approach this time around. And I think I've been listening to a lot of the Chinese economists, and I think this is the theme that most are talking about, and I truly believe it. You know how China had been really big on basically infrastructure spend, make go cities, tear down buildings, build them back up, but it's not contributing anything to longer term growth. And if Xi wants the world to take China more seriously on the world stage, they can't do that type of stimulus where they just do a bunch of infrastructure spend and tear down stuff, rebuild it, and add it to GDP, and everybody goes, we've fallen for that before. So now they're doing different types of fiscal spending, and I think
well, they're not tightening.
They are
That's
not.
Sure.
They are not. No, they're not. They're not. Point. But at the same time, maybe that is, as you're pointing out, is one of the things that is supporting.
Because you're right. Copper breaks down and then doesn't do anything for 2 weeks. Makes me a little cynical too. And
the thing is if we go into
risk off
but if we go into like a recession, or we go into some sort of let's say it's like a risk off, let's say the Middle East situation for argument's sake gets a little bit more tense and worse than expected, and it kind of sets us off into a more of a global recession. Copper will eventually break. It'll eventually succumb to pressure, but right now it's holding up very well, and I think it's worth noting. What else is holding up well is gold. I mean, gold is my analysis all week has been, while it's above 1950, it's bullish, and it's just threatening a breakout. So gold is as Gregor Horvat would say, very impulsive move here, and gold looks primed to trade higher. KMan, you have any thoughts on gold here?
Yeah, it's holding extremely well. It held already the first little retracement level that we saw there in the 1950s. It's holding really very well. Another one, and by the way, Gregor, for those who couldn't listen in this morning, Gregor was the special guest star on the Flow Show this morning. So yeah. So if people wanna listen in, wanna go and listen to that one, it's always very interesting what Gregor has to tell us. And by the way, he was showing silver as well, which could be in for a flyer if if the low 22s hold right now. But yeah, it's and the metals are undeniably still big. And I just want to reiterate what I sometimes say is that for silver to rally, you need good economic data. And yesterday we had pretty good economic data on the GDP front. So if we continue to see good economic data, silver could be a candidate to start rallying again.
Yeah, I agree with the silver look. But what about crude oil? I'm sorry, Forex Gal was just asking about crude, and I have to say that dips down to 81.30. This is your kind of, I call it a playground. It's your sandbox, right? So you kind of want to be a bull while you're above this 81.30. It's a 38% retracement, basically, is at 83. So we've been on both sides of it, but basically holding it. So I wouldn't be bearish crude here at this point. What are your thoughts?
No, exactly. As we said yesterday, I thought 81.5, 83 is a little bit of an equilibrium zone. And then we have to respect above the 90, which keeps on being rejected. So rightly, as you say, this is your sandbox between 81 and 90. So for as long as we're in there, it's And as long as the geopolitical situation is not improving, it's probably the buy on dips, but don't forget to take your profit close to 90.
Yeah, yeah. I mean, and unless something happens, because if something happens, Dale, could crude really get disrupted here? You know, could we see
That's
an
why I
energy
won't.
disruption?
Yeah, I won't short it for that reason.
Okay.
That if
all right.
if we have punitive airstrikes against Iran, they could still disrupt things in the Strait of Hormuz. And
They did
I think
already
that's-
some against some posts, right? But they said it had nothing to do with the Israel situation. But I don't think that Iran will see it from the same side.
I'm sorry, I didn't under.
The US already retaliated in some form, right? Overnight.
I did not read anything.
Oh yeah,
Yeah.
on
But
some basis.
and they said it had nothing to do with the Israel situation, but only because the US sites were had been under attack. But
Right.
I don't think the other side will look at it in the same way, you know.
Oh
Mm.
yeah. I
Yeah.
think they want war too. So anyway,
Hey,
yeah, I heard $300 oil if the straits get jammed up.
oh my God, could you imagine? Oh God, you know,
And
we're
with
gonna everybody's gonna have to invest into bicycles.
how about
Oh, yeah.
and with our strategic supply empty.
Yeah, but you're a
You know.
producer, right?
But
Well,
we are
we
the
used to
largest
be
producer
more.
in the world. Yeah, we are. Yeah. So
Then why do we import any?
I don't know. I'm going to make my own supply. How about that? So
Okay.
hey, here's
Go
your
ahead,
three
make
drive, Dale, on the dollar Canadian. Here's your weekly breakout point. This is the weekly channel we've been following. You can see that it, you know, broke out and you know, I'm targeting 140 now. I'm long, and I got long yesterday actually, and you know, if you're following along in the, you know, ForexAnalytix community, you know, I have a pattern in play as of yesterday. And because I mean, it is what it is. It's breaking out, but the daily sentiment index is a little weak for the Canadian. I think it's at 13. So that does concern me as we get up towards 140, but I think this is just a big momentum play. And now I do worry about crude oil, because if crude oil spikes, the dollar CAD could be right back below 137 pretty quick. So
yeah, but the thing is, look at the latest spikes. Look at stuff. You look, okay, dollar Canada is one thing, but you know, I like to look at other stuff, other crosses, right? And
yeah,
Canada is actually relatively weak on crosses as well, which doesn't stroke with an oil play, because if oil goes up, Euro Canada should actually come down a lot, and it's not.
Yeah, true.
There's perhaps something that supports the case for a higher dollar CAD.
And I mean, even the CAD yen looks little rolling over here, right?
Yep.
So yeah, good point, KMan. Hey, we got a couple of minutes. Oh shoot, we got PCE. I'm sorry.
Yeah,
I
got
just
PCE data.
Yeah, I just realized. Now PCE, although I think could be a mover, the market's got a pretty decent read on it as far as forecasters go, because of all the different inputs that we've got this month. So I don't know if it's going to be a huge mover, but you never know. I mean, you know, that's the thing about data. It seems people seem to be a little bit more jumpy now than normal. So we have the S&P right here in the middle, yields over here to the right. Dollar index is going to be here to the left. Let me pull up the data flash. And KMan, any last minute thoughts here?
There's a bit of a divergence in opinions about the PCE, and could all have to do with like rounding numbers and stuff. Some expect it 0.4, the other one says it could only come in at 0.2, but then you have 0.1 divergence. Is it really going to disrupt the market? I would look at if it comes in at around expectations, look at the personal income, because there's your consumer data again, as I mean, possibly consuming then. And if they hold up well, perhaps that's still a good sign. But yeah, I doubt that there is much to do. But let's see, if it comes out far away from expectations, there will always be a move, right?
And one of the things is we've had this continuous like stream of dollar exceptionalism data. I mean, you know, I mean, I don't know if we're going to get it today, but it has been a theme this week. And it's something that we have to keep in mind that, you know, US keeps pouring out
10 seconds.
hot data. Yeah. Less than 10 seconds. Here we go, guys. S&P is coming down. Data must be strong. I don't see it yet. Do you see it, Kay? Oh, yields are busting higher. Let me see here. I'll look at a different calendar too.
Must come in hot. Not helping the dollar that much.
There we go.
Got some
Oh, did I
wicks.
just miss it? I was just
In line,
checking
in
something.
line.
In
In
line.
All right. Yeah.
Look at yields. They're
They just
pushing a
gave it
little
back.
bit.
Lot of wicks here, man. People
Yeah.
fading this stuff.
Yeah, not a big reaction from the dollar. Not a
Yeah.
very big reaction at all.
You know where we could get a pretty good reaction?
From Tracy.
Yeah, you're a mind reader. Talking to Tracy Schuchart. I think
Tracy's always a disruptor.
let's talk to someone who knows something.
There we
Hey,
go.
guys, what's up?
You
Hey,
know
what's
what I
up,
mean?
Tracy?
Instead of our blather, let's get it right. Let's
Right.
get some good input from Tracy.
Have a good interview, Dale. Hi, Tracy.
Yeah.
Hey,
Have a
listen,
good weekend,
Hey,
everybody.
K-Man, thank you so much for all you do in F.A.C.E every week. Thanks, buddy. And Blake,
And
have a
and not
great
to
weekend.
mention on the flow show, as you were covering for Ryan, so he could be drinking beer somewhere.
Yeah.
So
Yeah,
My pleasure.
I learned from K-Man every day.
Wow,
I
that's very
like
kind
this
of you.
guy.
Thank you, Dale.
I like collective. What did you say? Collective
Collective
Alzheimer's.
Alzheimer.
Yeah, yeah. I think I suffer from that. Thank you, buddy. I'll add mine to the collection. So, thank you, team. Have a great weekend.
thanks, Dale. Have a great one. Thanks, K-Man. And Tracy, welcome to F.A.C.E and have a great interview with Dale.
Yeah, thank you.
All right, Tracy, you're the great way to top off the week. Why don't we get right to what's happening in the Middle East? Let's take it to the extreme. That's me. What happens to oil if the Straits of Hormuz get jacked up?
Well, obviously that would be a major problem. Same with the Suez Canal. That said, I do not think either one of those choke points will get closed for any reason. First of all, Suez Canal basically has its own army. And then also the Egyptian army, and Egypt makes way too much money from that, over $11 billion a year just in transit fees. And so I definitely don't think that will be shut down. And as far as the Strait of Hormuz is concerned, the problem with that is it's a closed choke point, meaning you can't go around it. You can go around the Suez. It just takes a lot longer. That said, I don't think that, I just don't see it happening, realistically speaking, because, Iran needs money right now and they need to ship their oil. So
Okay, what if it's not their choice?
Well, really, they're the only ones that would shut it down. Nobody else is going to shut it down. Everybody wants to
well, I mean,
sell
they
oil.
don't, right. They would shut it down if they were attacked.
Yeah,
Don't you
but
think?
I just don't foresee that happening. I mean, I think out of every scenario,
is that hope?
I think out of every scenario, those two are the very, very least that can happen.
Okay.
But again, as more countries are drawn into this conflict, right? We just bombed Syria again.
Right. That's what I mean.
The problem is going to be, first, are any oil installations hit? That's going to be a problem, right?
Okay.
And then second of all, I mean, everybody's trying, all those countries that are producing oil are making money. And so far it's business as usual. Nothing has been disrupted. Your real concern in that area is gas, because they just shut down the Tamar gas fields off the coast of Israel because of heightened tensions, although it would only affect the markets regionally as, for instance, Jordan, which is a major importer. But you know, it wouldn't affect global markets as much.
Okay.
So I think
doesn't
right now, I
natural-
mean, right now it's good. Obviously, we have big geopolitical risk. What, you know, I'd be
Yeah.
watching is to see if any oil installations get hit for any reason, or
Okay.
if, you know, Saudi Arabia, you know, gets angry and decides to, you know, stop some oil exports. But
Okay.
again, I think that the two waterways are okay
Yeah.
for now.
Yeah, we won't know until there's an incursion by Israel to retaliate, will we?
Right.
What the reaction from the Arab street's going to be. We already know what the reaction is. So, you know, this is something that I talked about, and you know, back here in natural gas, it was like comatose, and
Right.
it put
For
in
months and
like,
months.
yeah, you know, it was like if it was an EKG, it'd be someone in a coma. But real nice saucer bottom that we broke out of a few weeks ago, and the breakout seems to be holding. Could this be the sleeper play because Europe has recency bias because they had a warm winter last
Oh,
year, and maybe they're not going to be as lucky?
yeah, absolutely. I mean, I've been saying since September, before the breakout even, you
Yeah.
know, to kind of watch this market, and, you know,
Okay.
it could be a play, you know, we could get a nice squeeze this winter.
Are you-
If there's any problems with Europe, they're in
Right.
big trouble. And because the market's so short right now,
Yeah.
you could easily get a squeeze.
And just like a retracement, I mean, let's say it's it's a secular bear market, but you know, we've come down from 10 to 2, that's $8. So even a 38% retracement is 3, takes it up to 5, which is, you know, previous support and the breakdown.
Yeah, I was
Are
gonna
you
say, I
playing
think
are you buying natural gas stocks?
so. Yes, I'm individual equities. I'm not.
Right.
I don't have the stomach anymore to trade the
trade the
futures
futures.
market on
Yeah.
that one.
Well, you because well, it's the widow maker, not the widower maker.
Well,
So
exactly.
and
You know,
all right,
you know, I would tell everybody really be careful of those double and triple levered ETFs on this market too.
yeah, I can't stay away. So what issues? What do you like in the natural gas arena?
So I like producers that are distributors as well as that not only produce, but also have distribution. So I
Okay.
like Oxy and
Oxy.
Chesapeake CHK.
Oh yeah, I remember that one. Okay, so that covers a bit of the energy patch. You know, Trace, you were onto the uranium potential bull market a long time before the market woke up to it, and there were, you know, star performers. I know that I keep it up here for you. It's what is it? Oh,
What we're really looking at. I
Uroy.
had
Uroy.
Uroy, which I still do. That's a very long-term hold for me.
Right.
Um,
Chesapeake or any other uranium
so
place?
CCJ,
Yeah, that's
Kameko,
yeah, yeah.
and then
Okay.
there's also the Sprott ETF.
Okay, of uranium. Okay, so that's here. I think this is a Sprott. Nice move in. There it is. Bull move. So continuation of this. The world's gonna finally realize that we really don't have many other options besides nuclear at this point.
I think that, you know, I think we're headed into a multi-year bull market for uranium. I mean,
Okay.
we have the same problem. We have a decade of basically no capex while we still been having build out. Right. And then now the West is kind of waking up again to uranium. And you have to understand that it takes a long time to get to get this stuff out of the ground, right? You got a permitting
Yeah,
issues.
that's the
you've got-
impossible part, isn't it, to get permitted? Because
Exactly. So you got to
it's
go
so
permitting.
anti-green, you know.
And exactly, and you gotta dig it up, and so, I think we're headed into, again, a multi-year bull market for uranium. I don't know
Okay.
if I would necessarily, if you're not already in it, I don't know if I would necessarily chase it here, maybe wait for a bit of a pullback. But I think, again, for long-term, I like it.
Okay, you still in GFI? You still on Goldfield?
Or, yeah. Two,
Huh?
what is it? 2 years now I've been holding on to this. Yes.
Hey, let me ask you this, really. How many interviews do you do where the host has the symbols up to follow your trades?
And that remembers what I'm actually vested in. I'm very impressed.
All right, anyway, so yeah, gold, I mean, this huge move in gold. Do you think this time it's going to stick?
We'll see. I mean, I think that, I think there's a lot here with gold, and not only geopolitical tensions, but, I think that, I'd like to see like a run up again to that triple top, that weekly triple top.
Yeah,
Well, it's almost a triple top, just over
Yeah, it
2130 something.
right there.
Yep. So I
Yeah.
think next time, we could definitely break it. There's a lot of uncertainty right now. There's still a lot of, people are still worried about a recession. We've got obviously yields going crazy. And so I think that, we've had
Yeah.
this kind of a surprise move to the upside. And if you actually look at
It happened
positioning,
so fast. Yeah,
if you look at positioning, and it was actually at perfect weekly support, it hit perfect.
Yeah.
Yeah.
yeah. Look at that
And
moving average too, the weekly.
yeah, it was,
right there.
it was a perfect technical move. But the thing is that even with this 8% rise, really, if you look at positioning, there's no FOMO yet. So this
Okay.
could go a
That's
lot
good.
higher.
That's okay. Got that. So the shares aren't acting as well. I mean, you have a decent miner, but even like, Newmont's best of breed, you wouldn't know you had a bull move in gold, would you? When you
Well,
look at
yeah,
this.
that's what.
GDX is a little better. You got this kind of pop on the move, but we're actually having a negative week here. Why do you think the miners are underperforming the bullion? Most of them.
Most of them, well, GFI is doing well, but I don't, again, it's
Yeah.
tough market. Mining is a
Is it
tough
because
market. And
energy
there's-
costs are eating into their bottom line?
Oh, absolutely, for
Okay.
sure. I mean, mining in general is very energy intensive, and
Okay.
so of course that's going to, hurt them. Newmont's got, they're gonna be in a merger right now, so might be one to look
Okay.
at.
Yeah.
But, I mean, you have to
Gotcha.
be very, very careful with gold miners, in my
Okay.
opinion.
Yeah, I think there's one more good shot down. I wanted to ask you your view on the dollar. So we've gotten to the 50% level was, 107.20, a little over that a few weeks ago, kind of moving sideways. Dollar have more juice left in it?
It could, absolutely. I would think that if it does, we probably top out around 110, 112. And Janet
Oh,
Yellen,
okay.
if we go that high, I'm just saying Janet Yellen's
Yeah.
going to have to intervene again, as she did when we hit that 113, because it absolutely crushes emerging markets.
Okay. So you'll just skip over the 61.8 at 109. 111.5 is about 78.6 back trace. So
I'm just
that
saying,
would be a subpar euro, I believe, if we got up there.
yeah, I'm just saying if it gets up there, that's where they're going to have to intervene again.
Oh, okay.
I don't think they want it to get that high. Nobody wants it to get that high. It's bad for emerging markets. It's even
Yeah.
bad for Europe. So,
Okay.
you have to understand that the Treasury intervenes when they have to.
Okay. So we've had a nice sell-off in equities from 4,600 to 4,130. I know we've had some zigs and zags, but there have been some pretty big breaks and things like Nvidia. It's going to be higher today, and Apple, and until today, Amazon. And then you get good earnings like Microsoft had great earnings, but gave it all back. Do you think this, we've taken out 4,200. Is this a correction, or is there something more sinister behind this?
And that's the $1,000,000 question, right?
It is.
So,
It is.
and it's hard with kind of the Mag 7 selling off, I think, people
Yeah.
it had a
They're in
huge,
Boot Hill. Hey, Trace, I went to one of their funerals. They're all up in Boot Hill now. They were
okay.
slow on the draw. Okay. They were slow on the draw, the Mag 7. I mean, look at Google. There aren't many of them left. I don't.
No, so I think I think that I think there's a lot of profit taking right now because really they've outperformed this whole year, surprisingly.
Yeah.
And they're weighted so heavily in the index, it's bringing down the index, right?
Yeah. So could there be a lot more left of reversion to the mean type trade?
There could be. I mean, watch yields.
Okay.
That's really going to govern the market. I mean, if you watch, it just even intraday, ES and the 10-year are like in lockstep.
Okay. Not yesterday.
Not yesterday, but not every day. No, but
okay.
And I mean, like 10-year, not the yields, not yields. I mean, the 10-year, the actual U.S. Treasury.
All right, and like the TLT too. So they're trying to carve out a bottom, in my view. We could get another low. Do you think yields are peaking?
Perhaps.
Yeah. So okay, so that's going to be the big test. If yields drop and the market keeps dropping, then
well, if yields drop, I think the market will bounce.
Okay.
So when I say they're in lockstep, I mean, if you're looking at yields, it's inverse of what the market's doing, right?
Yeah. Okay. I would just look for a day when yields were down and it wasn't helping the market, or the dollar was down and it wasn't helping the market.
I mean, I mean, obviously nothing's a 1-to-1 correlation.
Yeah.
So, but that's the market, the higher yields go, the more pressure you're going to have on the equities markets right now.
But, people have really said no recession, right? So if there is a scenario where yields could drop and the market could drop, and that would be not all the earnings have been great, and that we have a growth scare. So that stocks could sell off on worries about earnings being compressed, and rates can drop at the same time. And I think that would surprise a lot of people if that happens, don't you?
Probably.
Not me, but it wouldn't surprise me. It would surprise me if it happens. That's all, but it wouldn't surprise me. Where else? Where else? I know you like fertilizer stocks and related to agriculture.
I was. Fertilizer was kind of the play of 2022. I haven't really done anything with it since 2021, 22. Things look pretty calm in that market as it stands for right now.
Okay. And so I think what's top of mind going into the end of the year, Tracy? How should we, what should be our, kind of our temperament?
Obviously, let's see if the Fed raises rates this meeting or not. It kind of seems like they backed themselves in a pause corner based on what they've been saying over the last 2 weeks. So we'll see, obviously that's something you're going to want to watch, and then, see what if, they tried to stage, Santa rally into the end of the year.
Okay. When do they usually start?
I think, well, I don't think anything will happen until, no, after November 1st when we get the Fed decision. So,
Okay.
I would just wait to that and see how that pans out. Obviously, if they do a surprise rate hike, which would probably be only 25 basis points, but what's 25 basis points at this point? It's kind of useless, but you never know.
Okay. You ever hear the expression that the bears feast on Thanksgiving and the bulls on Christmas?
I have not.
Okay. Well, that's like their last meal before they go into hibernation.
I got it.
All right. So anyway, you could use it. I didn't invent it. There's nothing original about, Solomon said there's nothing new under the sun. But
Absolutely.
really appreciate you coming in on a Friday, Trace. And
Yeah, absolutely. Absolutely. Thank you so much. I'm sorry I was
Yeah.
out of commission earlier this week.
We're human, and I'll get a hold of you later, and we'll talk during the winter. So I hope you have a great fall trading season in the meantime, and the whole team roots for you. You're one of our favorites, Trace.
Absolutely. I love you guys over there. Thank you so much for having me on. I really
All right.
appreciate it.
Have a great weekend. Everyone, have a great weekend. You could join the team in about, 24 minutes for the morning edge. And want to thank everyone. Hope we've added value to what you're trying to accomplish as a trader. It's not easy. And we'll see everyone next week. Good hunting, and don't just count your pips, count your blessings. Thanks again, Tracy.
Thank
And
you.
we'll see everyone Monday. Adios.